According to Cathie Wood of Ark Invest, deflation rather than inflation will be the most significant threat to the economy and financial markets in the upcoming year. What do you think about this? Watch today's video, Everyone to be Wiped Out, Ark Invest Cathie Wood Deflation Warning to learn more. Despite the recent increase in recession predictions, most have a timescale of 1 to 2 years out. However, Cathie Wood of Ark Invest said it is taking place now as inflation appears to be slowing down. According to Cathie Wood, the economy is in recession. She cited retail behemoths like Target and Walmart, who usually have well-managed supply chains, but have recently warned that they are suffering excessive inventories, as evidence that the problem's breadth and spread are greater throughout the industry. Retailers will have to lower prices to clear off extra inventory. Wood also reaffirmed her belief that the economy will experience deflation or lowering cost as a result of the present high inflation rate. According to Wood, businesses that benefit from staying-at-home trends fall under the same innovation umbrella as Tesla and biotech stocks. According to Cathie Wood, a general decrease in commodity prices and indications from the bond market that inflation expectations are reducing are among the grounds for innovation stocks. Wood did not only reaffirm that the economy will experience deflation, but she also sees a threat to U.S. auto debt, which we'll discuss in a moment. According to Wood, the U.S. economy will likely expand less than many analysts anticipate in the coming year, leading to a return to innovative businesses that can thrive regardless of the macroeconomic environment. This channel is not a reference for wealth advice, investing, or planning tools. Always do your research before investing. Overall, investor outflows have been reported for the Ark Innovation Fund for over 6 of the previous 10 weeks, according to Lipper Statistics. 20th September's afternoon trading saw the fund drop 2.4%, doubling the S&P 500's 1% loss. Wood emphasized the significant drop in pricing for numerous goods from their post-COVID heights. In August, used automobile prices at Manheim dropped by 4%, or about 50% annually. Since January's peak, used automobile prices have dropped 10%. Normally, this means new cars are being produced, so the old ones are being phased off. According to Wood, these prices might be slashed in half and reach their lowest point since the global financial crisis of 2007-08 if electric vehicles are as disruptive as we anticipate. If residual values decline, she also sees a threat to U.S. auto debt's $1 trillion or more. The fund manager pointed out that people prioritized auto loan payments above mortgages in 2008 to 2009 so they could commute to work and maintain employment. People are less likely to prioritize auto loan payments over mortgage payments this time around, she cautioned, thanks to ride-hailing and soon-to-be less expensive autonomous taxis, which might turn retrograde-looking quant models upside down. Elon Musk predicts deflation in the event of a further significant red fate hike. Nothing shown in this video should be taken as expert financial counsel. Before investing, always perform your research. Reasons why it matters on Tuesday, 20th September at 8:30 a.m. ET. The Labor Department announced its consumer price inflation report for August. The inflation rate is expected to decrease from 8.5% in July to 8.1% in August. It's possible that the annual core rate, which does not include food and energy, rose from 5.9% to 6.1%. After reaching a peak of 9.1% in June, headline inflation eased to 8.5% in July, suggesting hope that there may be a slowdown and room for the Fed to take a break. While the central bank would announce a 12% likelihood that would be discussed soon, Musk expects deflation in the event of a further significant Fed rate hike. Earlier this year, the Fed started normalizing its monetary policy by hiking interest rates by 25 basis points in March, 50 basis points in May, and 75 basis points each in June and July. As the economy navigates various uncertainties, economists have differing opinions about the potential effects of fast rising rates on growth. In advance of essential inflation data, Cathie Wood reaffirmed her belief that deflation poses a more significant long-term threat to the economy. The remarks were made as Wall Street was preparing for the publication of consumer and producer price data later. Deflation in the pipeline, heading for the PPI, CPI, CPE deflator. From post-COVID price peaks, timber, negative 60%, copper, negative 35%, oil, negative 35%, iron ore, negative 60%, dram, negative 46%, corn, negative 17%, Baltic freight rates, negative 79%, gold negative 17%, and silver negative 39%, wrote Wood in a tweet on 19 September. Cathie Wood believes you can think big when you're thinking about macroeconomics. Our content is exclusively educational. Before making any investments, be careful to do your research. Never mistake any of our information on legal, tax, or investment advice. The CEO and CIO of Ark is not the only one warning about deflation. Elon Musk, CEO of Tesla, recently added his 2 cents. A significant Fed rate hike risks deflation. Currently, Wall Street is putting in an 88% chance of a 75 basis point increase versus a 12% chance the central bank would announce a 50 basis point expansion. The innovation-focused ETFs recommended by Cathie Wood and their year-to-date price movement were all negative. Wood also sent another tweet last week stressing her belief that the Fed is incorrectly estimating inflation and is doing so. Cathie Wood is very keen on this warning, but we will love you to watch our video on Ark Invest. Cathie Wood huge update on major inflation downside. Cathie Wood on the Fed and economy to best understand why this warning. Thanks for your time.